This segment, we are going to be um, more like a wrap up from Mr. Wilson. Erumebor is not here, but is going to speak to us online. Is it in place? So he's going to talk about the way forward, unwrapping the insight from the sessions that we've had. Over to you, Wilson.
Thank you very much. Can you hear me?
Yes, we can hear you. Thank you.
Okay, thank you. And I want to say thank you to also the organizers, to FSDH Merchant Bank, for putting this together. I think this is, I've listened so far, very, interesting sessions. And also thanks to, the CEO of NESG that also, asked me to be here. So I've listened a lot. I'd say Dr. Kali's presentation was quite I don't know. The first session was quite hopeful. Lots of positive things to say, but Dr. Kali's session was quite, I mean, making us to see the reality of what's happening in Nigeria. But then I just want to, I prepared a detailed presentation earlier, but I was told there's been some changes to the agenda. So I will just focus on the concluding part of my presentation. So I'll quickly share my screen and then just talk briefly. I don't know if you can see my screen. Okay, thank you. So I'll just quickly say that going forward and taking this to the next level, right? We need to look towards developing an inclusive growth agenda for Nigeria. Something basically that goes beyond just GDP growth to include a lot of all the other key economic agents that who I think are quite very important, especially when you listen to Dr. Kali's presentation. It's not just about the growth of businesses alone, right? We must ensure that we're able to carry many of our citizens along as we make policies, because at the end of the day, if we're dealing with an environment with a depressed aggregate demand, that will, in turn affect, our businesses. So I think that's one key area. And I have just one a slide here that, showed GDP per capita, of several countries and how it's grown over the years. And one of the key thing that, the key message here is that if you look at all these countries, right, this shows the years of constant increases in their GDP per capita. And you would see that, for instance, Malaysia, apart from Nigeria, is even the worst case scenario. You see that there was a 24-year consistent increase in GDP per capita. And within that 24 years, you had just only one decline, and then it picked back. If you move to, Singapore, you had 33 years of increase. If you move to Indonesia, 30 years, China, 54 years of increase in their GDP per capita, with just only 1 year of decline. But coming to Nigeria, I mean, we've seen that just 16 years, and this happened from the year 2000 to about 2015, before the recession in 2016. So what that tells us basically is that for us to move from one level to another, we need to pay attention to how we can grow sustainably. And also, another point here is when you look at the base from where they started to where they are now, the latest year in the chart is 2022. You would see how far all of these countries are from their base, right? In fact, for China, it's almost like moving from near zero to somewhere around 70,000, in their local currency. So that, but for Nigeria, we're still a little bit far, but not so far from where we were in 1960. So I think this is, part of the problem. So we must go back to the drawing board and basically chart that inclusive growth path. And if you look at the manifesto that, like as Dr. Kale pointed out, of this current president, one of the things that was proposed is more like an average growth for of 7% in the next couple of years. So I just played around with some data to see if at all we're to achieve this average 7% growth. Say for this year at best we achieve 3% for this year, next year 5%, and then it goes up like that. Where will we even be, as a nation, right? So what you'd find is that we would see a case where output will double by 2028, which is about 5 years from now. And then we could, achieve somewhere close to 519 trillion naira economy by 2030. However, in dollar terms, that share is a bit lower. But what I think is important is how consistent can we be in terms of matching our reforms and political will with, ensuring that we have that consistency. I think that's where we need to be. We need to match our actions with all of our plans and goals and targets. And we must also try to, as much as possible to unlock private capital, focusing on key areas like manufacturing, ICT infrastructure, power, and growth must be sustainable. And one key thing to bear in mind is that in the next 31 years, our population will double. I mean, some estimates even show that that will happen before then. And so even if we're to maintain current unemployment rate, which is, by the way, still very high at 33%, we need to create about 3 to 4 million jobs per annum. Where will that job come from? I think these are questions, and it requires heavy private sector investments, coordination on the part of the government. So the other thing I'll talk about is how we need to align our policies. And one of the esteemed guests, audience, asked that question as to civil service reforms, how important it is. We can't just rely a lot on ad hoc policies. We need, to document. We need to ensure that, appraisals are done, before policies are made. And one key question I have here is who checks or who monitors or who does this appraisal before any policy is made? If the Ministry of Agriculture comes, for instance, to say, I want to do X, Y, Z, have they really thought about how it will affect, manufacturers or people in the energy sector or people in different other sectors? So what I'm thinking about, and because this is a thought session, right? I think we need to have something like a unit within the presidency that would be charged with, taking up the role of trying to see how we can, harmonize policies, and also in the sense of appraisals for any key major policy that will affect the business environment. I think that's something that, we can start looking at, more like an engine room within the presidency that drives all of these, reforms, across sectors. Like what we saw with the Naira redesign, for instance. I mean, after we've done it, we started talking about unintended consequences. Who does a policy like that, in the midst of an election, with even when the goals are not clearly set, and how we implemented it was clearly not the best way to do. So I think, as an example, if we look at inflation, and Dr. Kale rightly, mentioned this, you'd see that we have a central bank that, is focused a lot on the monetary side, trying to, hike lending rates, money supply and all of that to control inflation. But the real question we should be asking is, what are the drivers of inflation? How much of monetary factors contribute to this inflation? There was a study that was done by the IMF just a couple of weeks ago, looking at the European economy. And one of the things they found was that corporate greed, which is down there under other factors, was largely responsible for inflation within the region. This is because even when businesses were not necessarily affected by input or high input energy costs, they will take advantage of whatever is going on to raise prices. And we see that also happening in Nigeria. What can the CBN do about that? So that's why when you read the monetary policy communique, what you find is the CBN appealing, after they've increased rates, appealing to the fiscal side to address all of these other issues that drive inflation. So for me, one key takeaway and the way forward is, why don't we have because clearly this is bigger than the CBN. why don't we have a committee or whatever we call it, a structure or maybe a team? Because I'm also conscious of cost of governance. Why don't we have something bigger than the CBN that includes both the CBN, perhaps the governor, and maybe other ministries that are very crucial, as far as, prices are concerned, that meets every, would I say, quarter, month to see how we can address the problem of inflation, because this is the most singular problem that leads many Nigerians into poverty, that also affects business as it were. So I think that's one key thing I would say. And finally, I think we must also understand the role of markets and allow markets to function efficiently or near efficiently. Reduce all of this interference, that creates distortions across all of the markets. But more importantly, I think we must invest in the capability of government to see how, how they can make policies and also ensure that they even understand what's going on in the market. But at the end of the day, right, we need to also come to the realization that the market alone will not take us to the promised land. Markets by their nature would leave people behind, but we must see how we can. That's where the government needs to step in to address this issue of inequality, that comes with the market. Finally, this is the last slide, and I would say that we talk a lot about, finance, foreign direct investment, foreign inflows, and I think we're missing the issue here. And for me, right, perhaps maybe not missing the issue, I should rephrase. Maybe we should focus a lot more on some of the other issues. And one of that, is manufacturing. For me, this slide is, it shows the problem we have with our economy, and at the same time, it shows where the solution can come in. Where we've seen, and even the solution to some of the foreign exchange problems that we have. Right now we're talking about supply. So I'm referring to both basically outputs, manufacturing output as a share of GDP. You can see how very low it's been, 9%, for last year. And then when you look at exports, what share of manufacturing, goods, account for in our total exports? It's 2%, right? I mean, so I don't know how sad this is but it is depressing to me that we cannot grow, we cannot move from one step or one level of development to another if we continue with this kind of structure. I mean, it will take us nowhere. And one thing about manufacturing is that it sits, as far as productivity is concerned, it's not highly productive, as it were, compared to tradable services, banking, finance, and co. But it's also it has a much higher productivity than agriculture. So on a sectoral level, it sits somewhere in the middle. It's one of the sectors that can absorb many of our labor force that we have in abundance. And it's one sector that can drive productivity growth in our economy. So I think this is what makes manufacturing unique. And in fact, for agriculture, a lot of focus, if you say lots of investment needs to go into agriculture. In fact, for agriculture to be productive, we even need less workers to move into agriculture. So where will the jobs of the future come from? In my view, I think it is manufacturing and also some part of the services sector, which I would have loved to expand on, but I think for the sake of time, I won't. So let me conclude by saying that this is the time for us to prioritize manufacturing. The conditions are a bit, tighter, especially when we look at in the 80s and 90s, when many of those East Asian countries developed their manufacturing. Today, we have, globalization, we have, rapid technological advancement, in fact, at a pace that we've not seen before. And sometimes it's even very difficult to differentiate between manufacturing and services, because lots of tech is being deployed into manufacturing. But I should say that the window of opportunity is still there. It's open, but it may not be open for too long because we have, the rise of China. You see that the global power is moving towards the East, and the East is also moving towards Africa. That is also a concern. And if anything else, I think it should, heighten our urgency, particularly on the part of the government, to provide that much talked about enabling environment that Dr. Kali had mentioned, power, infrastructure, finance, and every other support that we can give to our manufacturing industry. We don't have an industrial policy. Our trade policy has been under the review for almost 10 years now. And we're talking about the AFCFTA. We're talking about Africans coming together. So I know I should end now, but I'd say that this is one area that we should focus on. We have a large market, we have human capital, natural resources, and a resilient people. I mean, this is something that we should be looking towards. And as a friend said, I was on a Twitter space recently and we're having a conversation, and he mentioned something that, a lot of times we focus on fixing the FX market, but we must have it at the back of our mind that if we fix the economy, that's when the markets will be fixed. So thank you.
Thank you very much, Wilson. And that is very apt, because I mean, if you don't fix the economy, interest rates, I mean, devaluation of the currency, inflation, high interest rates are just symptoms of a structural problem with the economy. So if you don't treat symptoms, you treat the cause. So we need to fix the cause of the economy. Thank you very much. Wilson is a senior economist at Nigerian Economy Summit Group, and is also a PhD student. I wish you the best in your program. So when next we meet, you would have had your PhD, and perhaps you are advising government where you are with your report, with all your resources. Perhaps you want to do told it the line of Dr. Kale. Work with them. We need resourceful people, quality people to drive this economy.